Hello and welcome to the Wednesday check-in brought to you by David Gockstein. I'm your host, Landy, and today is May 13th, 2026, and we do have a new Fed chair now. Mr. Kevin Warsh is now the new Federal Reserve chair. He was just confirmed today. We had some important economic data come out the past couple of days in CPI and Producer Price Index, PPI. And more importantly, is less so the actual CPI and PPI read, but the core CPI and PPI reads. And then, of course, we had Bitcoin pull back while markets continued higher, even though we did get some hotter reads for inflation data. What do we have here right in front of us? Bitcoin on the monthly. We've gotten our test of the monthly higher low closing structure at 82.5 to 83K, depending on your chart. And we're getting a little bit of a lower term time frame daily pullback into a major zone. So the big thing that I kind of wanted to point out today is the context on the monthly time frame. Something that I've talked about for quite a long time. Once we saw the highs, the last higher low push up into the upper second standard deviation area where I was looking for the highs to come in around 123 to 125. Well, I made note of the fact that we are in a monthly compression and a quarterly compression. Now, the reason that I bring that up is because there is really two scenarios that I think play out from here. And that is that the macro low is not in. We're not getting signs that it's in right now. It's a lot of speculation that it could be in, a lot of hot takes on the timeline that the macro low is in and everyone missed it and all that kind of stuff. But there is a scenario that can be specced out for how it could be in and what that might look like. And whether it be 60K exactly or slightly lower, and then getting a buyback off of 60K. I've mentioned before that when looking at this structure up here, I'll just take this uptrend. Well, we're going to have to do something a little different here. When taking the uptrending structure that has been broken on the monthly time frame, we'll just take part of it. With the higher lows and higher highs, you get a lower low deviation. And this would be a deviation of trend if it was going to turn out to be bullish in the context of a compression like this. And then what you would want to see is for this to run back to the top side and take out the upper second standard deviation, come back down. That's not what I wanted. I keep going for the wrong tool here. You'd want to see it come back down and then, form a nice higher low and then continue on and hit expansion phase above that upper second standard deviation. And realistically, on a deviation of trend, you would get, it doesn't really matter where this lands. It's where the next higher low lands. And that's where, you would position if this were to turn out to be a deviation. So that's one scenario that I've floated since the highs. And I've talked about this longer term time frame compression for a long time. The other scenario would be, of course, that this resolves itself to the downside, in which case we would get probably pretty intense downside from a monthly perspective, where we would see the lower second standard deviation or the current lows dropped on the monthly, and then we head down substantially further on an expansion to test the low side of this structure, 58, where, we had our 58 to 60K, where we got the low come in around 60K. But anywhere below the lower second, we're testing this entire swing down, which now, would be all the way down to price replace band at a lower third standard deviation, somewhere around the 46 to 48K. With this area coming in around 48 to 50, depending on your chart, 49K retest of the ETF highs over here. The run up to the ETFs, then the dump off to the monthly at 38.5. That would be the other scenario. That would be expansion in to test this low side structure and some of this high side structure over here from the start of the bear market structure in 22. So those are the two real big scenarios. I know that many are looking much further down, expecting like catastrophic downtrend. You're seeing a lot of the, hey, every time there's a new Fed chair, the market sells off X number of percent, yada, yada, yada. And look, there's data and statistics to back that up, but there is, there's a lot to be said about evolving structure over time, and just, keeping those statistics in the back of your mind and keeping an open mind to the different scenarios that could potentially play out and what what conditions would need to be met for those scenarios to play out. In this case, a monthly time frame close below 60K. We're going to start hitting expansion if we didn't already test into the lower side structure, of this swing low and this lower high over here. That's what I'd be looking for, right? From a monthly time frame on closes. But if we took out the failed, weekly lower high of the longer term downtrend on the weekly at 98 to 100K, that puts Bitcoin above all of these major lows on a monthly time frame. And then it's all about the weekly time frame, which, above $98,000, really the last bit of the weeklies would be the weeklies on the low side of the uptrending structure off of that 74.4 spike, taking out the high side structure here. And really, it's, then it's got a legit shot at that 108 to 110, where things really would change because the highs would be back in play. And so far, what are we seeing right now? What we're seeing right now is, a test of overhead resistances, and an expected one at that, off of 60K. It's something we've been looking for quite some time. We got that monthly at 82.5 to 83K that I just showed. And then the next big area, if it was going to get continuation higher, would be, right around 86, 85, 86 to 89.90, which is the lower high swing to close, and also where this higher low structure, the chart's not lying. This higher low structure right around the 89, 90K, depending on your chart, it's coming in. That's still all bearish retest area. We would have to see closes above 98, and then a recapture of these highs, above 100 to 108 to 110. So, look, it's a hot topic today because we got a trend break on the daily. So, this is where things do get interesting, right? We have seen some trend breaks on the way up here, and for Bitcoin, realistically, we saw a bit of a trend break back here, right? So where's back here? Back here is when we had this uptrend off of $65,000, right? We had a higher low structure. We got a higher low right here that came in over a weekend. We broke down into the support zone between 74 and 76 and put in a higher low at 75K, basically. Came up, tested again this overhead resistance between 78 and 80, and then up to test the monthly at 82.5 to 83. Got another test. Of course, this higher low right here coming in over a weekend, and now we have a break of that structure. So from here, what are the important areas? Well, if we hold 78 to 80, upside and potentially more is in the cards still, as a possibility. Back to the highs here, right by that monthly close open at 82.5 to 83, anywhere above there, we can start entertaining, moves above the upper second, especially, towards where the upper third is currently coming in, just shy of 85, but I'd be looking 85 to 86, this bigger overhead resistance, 85 to 86, 89 to 90 up there. Especially if we see this consolidating, putting in a low and trying to work its way back up out of 78 to 80. But if we do drop this area on a closing basis, can it kind of preserve some upside above the lower first standard deviation? Sure, but the real big area to pay attention to is 76 to 74, right? And where that that $75,000 higher lows, or I'm sorry, in this case, it was a lower low trend break on the daily, but this low at 75,000 in this 74 to 76 area, because if we did start to break down below, right around $76,000, there'd be expansion into this support area, right down to where that lower third is coming in, right around this low. If that's dropped, it's expansion right back 78 to 80, and then upper 60s is the play. And you'd want to see Bitcoin holding that area, because if Bitcoin does get a bearish reclaim for price action in that area, it's very highly likely that the entirety of this low is back in play and lower. And that's, anywhere below, I would say realistically anywhere below, 70,000, it's that 68 to 69K on the daily down there, that purple zone is the play. You got to watch that area carefully, because if that breaks, it's likely going to be working its way down to the bottom side of the range here, 65 to 62.5, and then 58 to 60 being the next big area. And that really would start to look, especially coming in towards monthly close, if that were to occur in that manner, that's where it's kind of bounce or die, honestly, because it'd start looking like another leg down would be loading, although you'd have to give it a chance for a possible swing of the 60K low and then a buyback in, which could then start to do the opposite and solidify the low. But we'll talk a little bit more about that kind of stuff over the weekend on Friday for the Friday wrap up, looking forward to the weekend's close for Bitcoin. And, with inflationary pressures now hitting core reads, I'm not expecting the Fed, the new Fed chair to come in and be like, we're going to cut right away. It's just not the type of environment when you're starting to see inflation bleed through to core metrics for CPI and PPI. That's a recipe for at minimum holding. I know that a lot are like, now they got to raise rates. Well, I'd say that likely holding, and then seeing how things play out as the higher oil prices works its way through those metrics. Because even if oil were to dump off and stay low, it's going to take a while for you to see the core metrics come back down in terms of, getting the uptick that we've already seen. It would take a while for it to come back down. So, now it's about, watching oil. I know that everybody's talking about the big meeting with the Trump administration and the different players in the administration and business leaders from the United States that are making the trip to China. But realistically, at this point, I've been telling you, it's all about oil, right? Oil is set up in a range, right? Big spike up, big spike down, and above 90 to 95. I think that the floor is set higher, right? And I think the floor is going to remain a little bit higher for a while. But we just got to watch trend. We now have a trend change with a trend reversal set up off of this same area, the 90 to 95. Got to swing through it with the low coming in on Wednesday, the 6th of 88.66. But nice buyback, and then now a recapture and a little bit of rejection off of that 98 to 102.5, right? We've been talking about this for a while. This is a downtrend to a downtrend break with a higher high, higher low in place. This is the reversal setup. And now it's, do we start to see closes over that 102.5, moves to that 105 to 107, anywhere above there? I'm looking 110 to 112 by this high, anywhere above there, and the upper second standard deviation on closes, I'd be looking for either already getting hit. But if it didn't get hit, I'd be looking for the 115 to 120 highs up here and starting to work its way into the 115 and 130 zone. Not a foregone conclusion. Big thing that I've talked about, and I'm going to keep reiterating because I think it's so important, is that if we see that there is any kind of tensions that are kicking up in the Middle East in terms of kinetic conflict, we would likely have a scenario in which we would see rising oil prices, but if there is no infrastructure damage with now the with the Saudis or UAE, then I wouldn't be looking at it as anything more than a retest of those highs and potentially swing of those highs. But if there is any kind of infrastructure that gets hit for the Saudi side of things or the UAE side of things, that would be a fundamental disruption to supply. And this is all in the context of normalized shipping routes now. We're starting to get normalized shipping routes. So demand destruction is still fully in play in Europe and Asia. We're seeing that likely we're going to see some demand destruction as a result of increased costs here in the U.S. as well, not as severe. And what we are seeing with oil is that as these prices have been rising in these areas and we see the demand destruction narratives as well as the real pressures on the economies in Europe and Asia, that capital is flowing to the United States markets and it's really buoying things on the bid side. And that's to be expected, right? I mentioned this before. United States seen as a safe haven, very liquid markets, and top energy producer in the world, right? Largest economy, right? You're talking about like looking at this from the perspective of an investor and seeing things that are where can you capture value, and it's been in a flight to capital in U.S. markets in this case. How long does that last, though, is the question. And when do we start to see a risk rotation to risk off in traditional markets? Right now, we're seeing that, the trend cracked on Bitcoin, but there's still a chance. We got new highs in NASDAQ and SPY. We did get a little bit of a pullback in the early session for Dow, but these are lower term time frame things. Are they indicative of larger moves to come? We'll see. If we did see oil come back down below 98 in the basis band here, I would expect to start targeting 90 to 95 again around the lows. If we get 90 and that 88, 60 area dropped, then we can start entertaining a move back down. That would likely preserve a more intense risk on environment, even in the midst of corrections in traditional markets, and likely allow for some room on the bid side to start coming in for crypto as well. And, it's about sustained moves down. And even then, if we get sustained moves down in WTI and Brent and so on and so forth, it's going to take a while from the economic side, although risk would roll, likely maintain on that risk on, and you likely see more risk on headed back towards Bitcoin and crypto. You still got to look towards the economic numbers and how sticky is inflation after that. When looking at traditional markets, Dow still sticking above and chopping around and really getting a compression. So the next move is going to be a bigger one here for Dow, and it's becoming pretty clear above the highs here at 50,130, 50,150. We're going to likely expand to the highs around that 50,500 and likely continue on 51, so on and so forth. To the downside, if we do start seeing the low dropped at 49 to 49.3, I would start looking, 49 being the lower first standard deviation to the basis here. I would start looking back at the lows here, 49.7, 49.4 to 49.5, or I'm sorry, 48.7 to that 48.4 to 48.5. And in an expansive phase to the downside, we do have to start then targeting 48 to 47,850 down here, and then eventually into the mid 47s, and then a possible gap fill down below in the upper 46 7 to right around 47K for a gap fill, and then kind of gauge the weekly area down here, this macro area, in the mid 45s to 46,250. For NASDAQ, pretty straightforward here. If we are going to see the structure crack in terms of the uptrend It's going to occur on closes now below 28, 630, 625 to 630, this upper first standard deviation. I'd be looking for a move down to the mid 27s, upper 27s, 27.5 to 27.8 by the basis. Get some gap fills in, kind of gauge it from there. It could fall aggressively down towards 27K by that lower first, and then try for a retest of the high side structure at 25.8 to 26.2. Otherwise, it's continuation, likely headed towards the 30K region, 25.5 to 30K on the upside. SPY, also pretty clear. Same kind of deal here. Looking at 730 rather. Anywhere below there, I would be looking for a gap fill around the 720 to 725 area here. If we did start to see a break below 720, I'd stare right at that low at 715. Anywhere below there, looking 705, 710 by the lower first, and then anywhere beyond that, I'd be looking for somewhere around the previous highs and that high side structure, 690 to 695, and then potentially roping in 680 to 685. Otherwise, I've been saying 5 points at a time for SPY, and that's pretty much what we've been getting. I was talking about 740 to 745, 745 to 750, and then potentially 750 to 755. So we're kind of getting all that. It's a melt up phase. It's just about when do we see a wider correction. And all we've seen so far is a little bit of daily corrections into more hitting the bid and then right back up to lift the offer. So that's pretty much all I got for you today. I think Friday we'll have plenty to talk about. There's going to be, likely some news breaking out of the meetings that are happening with the Trump administration in China. I'd pay very close attention to Bitcoin. If we do see a risk off rotation in traditional markets, this likely ends up coming down further. Just watch the local area strong in the 78.4 on the low side. But if it starts to crack, we really got to entertain moves to that 74 to 76 and watch it closely. Otherwise, the highs are still in play for this local move, at least as it stands right now, and just gauge it day by day. I hope you share this out there if you did find this information helpful, and I hope you have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe, and of course, as always, stay safe. With all of that said, Landy out. Take care.